This program is brought to you by Connie Doto of Connie Doto Realty Group, 119 Pleasant Street, Methuen. When you want results, don't make a move without us.
Welcome to the 5th edition of the Doto Real Estate View. I want to thank the community for coming forth with some programs that you'd like to see, and one of them was really understanding what short sales are all about. And that's why we've invited the expert here, James Corey from Mortgage Resource Solutions. Thank you, James.
Thanks for having me, Connie. I appreciate it.
Great. You know, there's a lot of fact and fiction about short sales and what you should do with short sales and actually when somebody should actually entertain one of those. So maybe you can briefly discuss what a short sale is.
Sure. Yeah, and like you said, a lot of people don't necessarily know exactly what a short sale is, what it entails. An actual short sale itself is when a property is sold, it is sold for less than what is owed on the property. So that means that the net proceeds going to the lien holders, whether it's one mortgage, two mortgage, etc., the net proceeds is less than what's owed, and unfortunately the homeowners don't have the difference, meaning the cash money difference to bring to closing. Therefore the payoff is short of what is owed to the banks.
Good. And again, a lot of people, you know, they'll ask, short sale, what does that mean? Who brings the money? So I mean, I think that's a good understanding of your explanation here. You know, people may find themselves in this situation. Give us some examples of you know, why people would do a short sale versus foreclosure. I mean, it's, you know, there's differences, I know, and maybe to get into some of the laws on it.
Sure, yeah, and you're correct. There are differences, and I think a lot of times when people hear the word short sale, it has a negative connotation towards it. And the reality of it is it affects all economics of people in high incomes, low incomes, the middle America. It affects everybody. We've done them for people, unfortunately, who, you know, several $1 million homes that, you know, they made bad choices in investments, and people locally here as well. It does affect everybody, and I want, you know, everybody to know that it's not a negative thing. It's actually good. It gets you out of the situation you're in. And I think a lot of the factors that, you know, the qualifiers would be is people are behind on the mortgage. They go to Doto Real Estate. They call you up, Connie. They say, all right, you know, I'm behind on this mortgage. What is my house worth? And I think that's the first step, is to find out what the actual value of the property is. And that's where you come in and advise them, you know, your property is worth, you know, for example, $200,000, but they may have bought it several years ago before the market really went down, and they probably owe $250,000, $270,000. So they're upside down. They're behind on their mortgage. That's when they seek, you know, our help there to help them with that, as well as you to list it.
Right. I think the important thing that you just pointed out, that it's, you know, everybody has the ups and downs. It's a sign of the times. It's the economy. You know, some people, you know, for job loss or whatever. So not to feel ashamed or embarrassed that they're in this situation. It's across the board. You know, I just think that people have to understand that there is a way to get out of it, so you're not choking yourself with these payments that you don't have to deal with. So I think that's real critical that people understand that.
Yeah, Connie, you said it exactly correct, is that it affects everybody, and don't feel ashamed. Don't wait until it's too late. Don't wait until you're 5, 6, 7, 8 months behind and then come to us for help, because at that point, although it's doable, it really makes it tougher. You know, I always say people who are proactive are people that know that, you know, things are getting tight and they can foresee that, you know, I may not be able to make my payments in a few months. Those are the people, you know, they come to us early. Don't be ashamed. We're here to help you guys. We've heard every kind of scenario, and it's affected our own friends and family. So we're there to help you guys.
I think one thing is, I know a lot of people are always concerned about if the bank does forgive them that amount of money that they owe them, is the bank going to come after them for that money?
Correct.
I mean,
That's always the most crucial question that is always asked to us is whether or not that difference is forgiven. And what we're talking about is it's called a deficiency balance. So I'll explain exactly what that means. That is a difference of what you owe on the property. And in an example that we used earlier, you owe approximately $250,000 on a property. The property gets sold for $200,000. That $50,000 difference is called a deficiency balance. That will typically be waived by their lender. And what happens is when that short sale is approved, it will clearly state in that letter, it will say, for example, if it's Bank of America, it will say Bank of America and or its investors waive the right of the deficiency balance. That means they will not go after you for it. And another, question that comes up all the time, Connie, is the tax question. Whether or not I'm going to have to pay the taxes on that deficiency balance, for example. What happens is you will receive a 1099-C from your lender, and if it's one or more, so if you have multiple mortgages, you may receive multiple 1099-Cs. The good thing is on December 20th of 2007, the president at the time passed something called the Mortgage Debt Relief Act that has been extended through the end of next year. And what that does is that helps homeowners who own or occupy the property. So, it's your primary residence. If you do get this 1099-C, you are covered under that Mortgage Debt Relief Act. So, there are a lot of government programs that actually have benefited people in need of it.
Maybe to go through some of the steps that a homeowner would have to do, whether to decide to do a short sale or not. Maybe just to go through that process a little bit and having people do that. I mean, I know I meet with people daily that people, they're saying, geez, I owe more on it, what do I do? And you're right. We go out, give them a price, and then we connect with you. Your company has done fabulous work with us to get people to where they need to get to. But just kind of go over the steps of why somebody would entertain and go into a short sale.
Yep, somebody would, it really depends on the scenario. Somebody may be in a position where they are behind on their mortgage, and at that point, when they go to Doto Real Estate and they see, their market analysis on their property is much less than what they owe, their options are very limited. Their banks may not be able to refinance them because there is no equity in the property. So they're really limited at that point, whether if they cannot make the payments, they let it go, that would fall into a foreclosure. So obviously, the option of a short sale is much better. What it does is it allows you to sell your property. It allows you to basically, if you qualify, based on the economics, what is the hardship? In every short sale, there's something that needs to be called a hardship. An example of a hardship is a loss of income, marriage difficulties if people are getting a divorce, relocations. Those are just a few different illnesses, things of that matter. Those are some examples of hardships where people who we sit down with that are not behind as of yet, but their property is upside down or what they call underwater. Those would be some factors that would go into whether or not they would qualify for it.
Now, why would somebody do a short sale versus a foreclosure?
It's a no-brainer. The short sale affects your credit not as adversely as a foreclosure does. In a short sale, you're allowed to purchase a property within 36 months. There are other programs out there that allow you sooner. If you foreclose, you're at 4 to 5 years. So right there. As far as on your credit, the credit score, there's no actual formula that goes that says if you do a bankruptcy, a foreclosure, or a short sale, your score is going to drop by X amount of points. However, a short sale affects your credit significantly less points-wise, as far as purchasing other vehicles, credit cards, things like that. Whereas a foreclosure on your credit puts you in a much worse position.
Now, if you had a bank foreclosure, does that mean that you have to pay the money back?
Well, I found recently, and typically if you do have a bank foreclosure, the lender has the right to go after you for that deficiency balance. Again, that deficiency balance that we're talking about is the difference of what the property sells for. In that case, it would be what the property sells for at the auction. And that remaining balance, the lender has the right to go after you for it. And what I found is typically over the last 4 or 5 years that short sales, foreclosures have become more prevalent in our in the real estate market. That at the beginning I did not really see them going after them. I've actually heard this past week alone 2 people who have contacted us and said, "Hey, is this true? I've received a summons that they're going after me." So I think now that kind of some of the dust has settled, a lot of these lenders are going after people.
Wow.
Yeah.
So that's another reason to do a short sale versus a foreclosure.
Correct.
Because they could come after you. With a short sale, you get a letter that states they're
Yeah, the short
relieved of
sale,
that.
once that's approved, Connie, it's going to tell you specifically, it's going to outline whether they will or will not go after you, whether it is waived or not waived. So you're going to know going into it, if you're not comfortable with it, you don't have to move forward. And it's stated right there in black and white. It's going to tell you exactly what it needs to say. So you'll know as a consumer, a homeowner, whether or not this is the best option for you.
And I know in some cases, the banks have asked for that homeowner to bring some money to the closing for them to do the short sale.
Correct.
Which is not, you don't see it frequently. The numbers that I've done, it's been very few, which is very good for the consumer, but you may want to talk a bit about that.
Yep, that does happen from time to time, and like you said, it's not that often, but it does happen. And what the bank, it depends on the situation. If they see somebody can't afford to contribute some type of money, whether it's a few $1,000s or something to that effect, they will say, "Hey, listen, this short sale is approved contingent upon you bringing, $3,000 to the closing." And if it makes sense for the homeowner and they're able to, they'll do it. And also what I found that in those positions, the banks will say our investors will waive the deficiency if you do bring in that money. And what the investors I'm referring to is the Fannie Mae's, the Freddie Mac's, the people who have lended the money to these banks to allow the homeowners to purchase the property. So that is an option out there from time to time, and it does help people out, get out of the position.
What's the role that your company plays in the short sale? I know it works hand in hand with the real estate agent. Maybe just go over the total process of how this works.
Sure. The first thing, the step would be is you would call Connie Doto at Doto Real Estate Group. And then at that point, she would sit down with you, go over the market analysis. If the property looks like you are underwater or upside down, what we do at that point is she would contact us. We would sit down with you, go over the entire process in detail, because both of our goals, my company's and your company's, is to make sure everybody going into it is comfortable with it, knows their options, is aware of it, and at that point can make a wise choice that what is in their best interest. What we would do is have them fill out a short sale packet. We basically know what every single bank is gonna request. So we have a packet of paperwork that we will go through with each individual homeowner, fill it out. We will give them a list of documents that they are going to request. Every bank requests the same type of financials, similar to when they purchase the property, such as tax returns, bank statements, pay stubs, etc. From there, we would send out third-party authorizations to the bank or banks, depending on how many mortgages there are, which will allow us to speak with them as a third party. It's an authorized third party on their account. From there, once an offer comes in, Connie and her office will send over the offer and some other documentation, such as a pre-approval and documents that the bank will need. We will send over the entire short sale package to the lenders. From there, once it is received at the banks, they will assign it to a processor or negotiator. And at that point, they're going to actually order a BPO. A BPO is a broker price opinion. It's basically an appraisal on the property. The lenders want to make sure that that the offer coming in is in current fair market value. So obviously, they're aware that it is going to be less than what's owed on the property, but they want to try to minimize their loss as much as they can. And then from there, we basically will, go back and forth as far as if it's in market value, supply other documentations that, will help smooth the process over and expedite it.
And then we have a closing, and
That's
everybody's
right.
happy, so the short sale is complete.
That's the best part. You see the homeowner, they get to,
that's
move on from
absolutely.
the stress. So once the BPO takes place, Connie, the next step is that the bank will look at the value. They want to make sure that the value is in line with current market value. What they're trying to do is minimize their loss. they know the lenders know that they're going to take a loss. It is a short sale, but they obviously want to minimize that loss to make sure that they're getting the current fair market value. Once that BPO is done and it is in line and they figured out the value of it and whether or not it's going to work, they may counter. They may, and say if the offer is, $170,000, they may say, well, our value came in at $200,000. So they may counter like a regular transaction, and they're counting on behalf of the bank for their investors, just like you normally would counter on behalf of the homeowner. Mm-hmm. So it's very similar in that aspect of it. Once that value is figured out and they accept it, they will send us the short sale approval, which is always a good thing. And at that point, we will go over that with the homeowner, make sure it is in line in what they want and it reads correctly. And if all goes well, we will set up the closing, and the buyer will at that point perform their normal buyer process, such as home inspection, appraisal, and things like that. Mm-hmm. And then it's closing.
Right.
Everyone's favorite time.
Right. That's the good part. When the homeowner is feeling like, free from this ungodly debt sometimes, which doesn't feel good. They feel like, I own a home, the American dream, but, for the economy and everything that's happened, it kind of put them in a bad position. So they feel so much better.
They do, and that's the best part of it. I drove one time an hour and a half just to tell the person that I was happy for them. It was a really difficult situation for them, and I really empathized, and it was so happy that it worked out. I literally just drove to say, I'm happy it worked out for you. So that.
Now, they closed on their short sale.
Yep.
They want to purchase a home.
Yes.
Maybe go over some different cases that you can purchase a home, the time frames. I know they're not exact.
Correct.
But there are some, parameters that are established, and again.
Yep, and you said it correctly. It varies from situation to situation, and everyone needs to be looked at. Every single, short sale needs to be looked at case by case. But some examples will be that if you do short sell your home and you aren't behind on your mortgage at the time you short sale it. So what that is exactly what it says. You short sell your home. You're not late on your mortgage, so it's somebody who's kept up with the payments and the bank has allowed them to short sell. You're at that point, if you qualify to purchase a home, you can buy the next day. Mm-hmm. There's a program out there by HUD, and it's an FHA loan that they offer that if somebody is not behind on their mortgage at the time of the short sale, they will be able to qualify for what they qualify for. And obviously, the goal in that program is to put somebody